Good morning, everybody. ¿Cómo allez-vous? How you doing, huh? Ohio? Jumbo? Ni hao. Hello, Guten Morgen. Morning, everybody. Hey, it's time to do Forex strategy analysis. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. A lovely ECN that offers you Forex, energies, metals, indices, binary options. How lovely is that? It's the full bouquet for you to trade. If you're watching this as a video, please give it a like. That takes you less than 1 second. And maybe you could spare the extra 22 seconds and leave a comment, considering you're watching a 1.5 hour video. If you could spare that time, that would be wonderful. Hey, did you know trading's risky? You might lose some money. This risk is not appropriate for everyone. Your past performance isn't necessarily indicative of future results. Touch the stove, you might get burned, and set your clothes on fire and burn your house down, so be careful. I'm really surprised in the United States that, like, I was telling my wife, we got, the stove with 6 burners. I'm like, I'm surprised there isn't like giant warning labels like, warning, the fire is hot, in like 9 different languages, right? Just because you never know. But anyways, hey, let's do some trading. So this is yesterday's trade plan on a 5-minute chart for the Euro USD. Have I altered this in any way? This is the discussion we had with Mikey. Okay. It was before anything had happened. So we ended yesterday, oops, right, oh, what is my drawing tool doing? It's drawing on the wrong screen. That's going to be a problem. Hang on, let's see if I get my drawing tool working. Talk amongst yourself. All right, what's it doing? Okay, full screen. Okay, that looks better. Okay, I think we should be good. All right, let's try this again. We were right here. The idea is that it's trending, and it could plausibly reverse and head up. And for it to do it, we'd need a double bottom, higher high, and all that kind of stuff. But generally speaking, the trend is down. The direction should stay down. And therefore, I would anticipate, a pullback, right? And then a drop. So that was the idea, that we're at support, and at some point in the future, that support would become resistance. Well, instead of heading up, what it decided to do was head down for a while. Not that long. This is a 5-minute chart, right? Which is absolutely, totally acceptable. It just makes the job even easier. So what do you do when you're in a downtrend and you've made a lower low? No, don't say sell. Thank you. Fib it, or past performance or past support should become resistance. Okay? So you look to this area to the left, what used to be our low, which we measured the fib with, and you come across, and that's one area you should eyeball for the potential sell. But then you also do the fib, right? And you're kind of looking for a confluence. So I had one from here on the, at that time to support, so you go to the new support. And then this is what actually happened. Now remember, there's more to it than just this. I mean, obviously there's psych levels and pivot points and stuff, but that's the general strategy that I know I've taught you, easily 100 times. That's kind of what we're looking for. It's a continuation pattern, right? Lower low in a trending market, in a downtrending market. Therefore, you anticipate a lower high, and you sell the rally, I believe we said to Mike. If it's if it's trending down and it makes a lower low, sell the rally. Sell the green candle. And it's going to pull back somewhere between the 382 and 618 Fibonacci. I'm going to use the one we already have, just to save on fib studies, Why waste them? In this case, the 382 and 618 Fibonacci retracement, well, it went right into the 50%, which is not an unpredictable place. In fact, that's textbook, isn't it? Okay. Now in this one, you can see the let me move this. You see the target? So the target is exactly where we are right now. Okay. This level here is predicting this level here. Lufle tullumum. Okay. All right, so let's carry this forward to the London Open, right? Is the market still trending down, yes or no? At this point is what we're talking about. Okay. And so we had to move here to here to here. Was that a lower low? Yes. So what did we do to set up the next trade? Yeah. But before you fib, what I eyeball immediately, I always take the previous low, and that's generally, I don't even need to fib it. Generally, that's what I'm looking for is a role reversal. It used to be support becomes resistance in the future. Okay? And that's generally somewhere between the 382 and 618. Okay? So whatever floats your boat. Okay? So then we move into the London Open, and it was once again at 50%. Now we didn't get low we wanted, but it is what it is. So now we wait, because we're going to keep doing this over and over and over again until it stops working. All right, so let me ask you something. When the stock market was crashing, we're having the worst trading day in like 7 years. Did you get a message from me that said stay calm, stay focused, and that smart money is going to look at this as an opportunity to buy stocks like, oh, I don't know, like Apple? I think I mentioned Apple specifically, like, hey man, we've been trying to buy Apple, eh? I don't know why this portfolio manager talks like a Canadian surfer. But anyways, portfolio managers are going to sit around and say, hey, there's a lot of good stocks we want to own long term, but the prices are too high, so we're just going to wait and wait and wait. Then on days when the stock market's crashing, they go to probably like a binder, you know, like a protocol binder that says, all right, on big down days, buy these 3 or 4 or 5 stocks that we want to get into. Remember that? Right? When there's, do you guys remember talking about blood in the street and being the one buying? You know, or even the greater example, back in 2007 and 2008, I bought like an $85,000 used car for 27,000 bucks because I was the only one in the world with money. I paid cash, like cash. Here's a suitcase of cash. Because when there's blood in the street and you're a king if you have cash, right? Same thing when there's blood in the street, you stay calm, you stay focused, and you look for deals, stuff that you want to be in, because you know the dumb money buys it high and hopes it goes higher. That's how the real estate works, right? Pay too much and hope you can sell it for more. So anyway, so that was Monday. It's Thursday, and the stock market now has had the biggest rally in that period of time. 600 points yesterday. Well, good thing we're smart money and we're not freaking out, right? Isn't that nice? Does it feel good to be smart money? So anyways, so where are we in the scheme of things? Let me reset this chart here. So we're at a 618 Fibonacci retracement. Well, you're wondering why it stopped, right? That might be it. If you were a bull, where would you be waiting? Would a 618 be attractive to you? I think I'll buy the 618. 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 See, I'm not saying it's right. I'm just saying somebody's thinking that. Now, I also think someone wants to buy this. I think they're going to wait and buy the 786. Let me get rid of some of this if I can. Okay. Did it did 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 did. Do, 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 do. Ba, 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 ba. Louflet. So everything's going good. Everything's going good. So we got a Fed, Jackson Hole. The Jackson Hole conference is underway. I don't think Grandma Yellen's going. I think maybe Grandma Yellen would rather be in Florida. What was the result of the Euro trade? Which one? You're so funny. It's like asking a professional golfer, well, how was that round of golf you were doing the other week? I'm like, I've played 19 rounds of golf since I've seen you last, dude. Which one? So, oh, I don't know. It's not around anymore, yo. Boop, 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 boop. So funny. The Euro trade. And that's the dangerous part of trading. I mean, I know you didn't mean anything by it, but the secret to trading, and this is good trading and bad trading, it doesn't matter. Never get married to a trade. This is why I have that 3-second rule. Yeah, I don't know. It doesn't matter to me. It just, honestly, doesn't matter. It all works out in the end. This is why I keep giving, here's a different message. I tell you, some days the market giveth, the next day it'll taketh away. So I don't make a big stink about anything. If it's a losing trade and you don't want to be on it, just get out, take the loss. It doesn't matter, because there's already a better trade somewhere that should be making you money. So you don't want to stare at a losing trade. But same thing with the big one, a big winning trade. Say, hey, wow, that one's really trending well. Move your stop, grab another trade. Grab another trade, grab another trade, grab another trade, grab another trade. Just move your stop and grab another trade. Just don't worry about it. Just, try not to have emotion on it, I guess. But let it run. Move your stop, let it run. Just get another one, get another one, get another one. Just get another one. Don't worry about it. Get another one. Yeah, so everything's messed up here. So what is this? You guys want to talk Euro Yen? All right. Okay. Now, why would I have trouble on this one? Well, I'm fundamentally bearish on both. So I would never look to trade it. Wouldn't possibly know what to do with it. No, my bias isn't up. My bias is I don't want to own euro and I don't want to own yen. So why would I want to trade euro yen? So that's my only problem with it. I have no idea where it's going to go. Okay. So I look at it and I don't even want to analyze it. Just I don't, to me it's just like it's fool's gold. You're going to see what you want to see because you want to trade it. I don't want to trade it, so I don't want to see anything. So yeah, we're at support. I wouldn't sell here. How about that? So, sorry. Trying to be as open and honest as possible. Just, I don't know what to do here. Another way of looking at it is I'd probably lose money. Okay. So I don't know. That's what I see. Anyone going to buy the bottom on the monthly central pivot point? I mean, we know we're at support, right? So how do you want to trade on the smaller time frame? This is a 15 now. Are you at support? Yeah. What do you want to do now? Maybe that. But see, again, my problem is I'd be happy that the yen's weak, but I don't want to buy the euro. Right? And if the yen got weak, that would be risk on, but then that would make the euro weak. So I just don't get it. I just can't even do it. I'm sorry. I can't do it. I got to find another trade. I can't even talk myself into it. Just doesn't make sense. So again, if the yen weaken, that risk on, which means the euro would weaken, and I mean, I just don't get it. I can't trade it. I'm sorry. I tried to make some sense out of it. Yeah, okay, pig dog is nice. So risk on, for example, would weaken the yen, and maybe if you wanted to buy it, Aussie would improve, because risk on maybe means what China's doing is having positive effects, and I don't know. It would be more stabilizing to the Aussie than it would be for the euro. Or maybe CAD. Maybe CAD would benefit from a strong U.S. economy. Maybe I talked myself into that, right? So stabilization of the Canadian dollar and the continued weakness in the Japanese yen. All right, I might be able to get myself into that. But even a breakout retracement would be better, right, first. So I hope even just talking it out helps. Right? If you can hear my ambivalence or whatever. One, like the euro yen, I just couldn't do it. And those other ones, well, maybe we can talk about it, right? So hopefully that's helpful. At least, talking my feeling out. And trust me, I don't do a good job of that. So, yeah, we have this coming down. It's still coming down. So what do we do, right? So, right, Felipe, so we've had this set to fall for weeks, in fact, and now it's falling right off of our resistance line, right? Let me mark it. I think this, right, you see here? That's why we have this all set up. So we're right there, kicking off of this 50%. So I don't know, this is just still, it's all old trades, right? I mean, we had it lined up ever. So now it's broken out, maybe, potentially, right? We're kind of in here. So we're not on the free and clear plan. So this is a tricky place, right? It could do this. Seems unlikely, but it could do it. But more preferably, it does this. Capiche? So why don't we do this? Do, 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 do. What do you think? Smell like a smell like plan? Wake up in the morning and I trade the euro yen. All right. So, like I said, nothing's changed. We've had this lined up for forever, ever. And just to put it into context, I think I got to go out to the daily, and then I got to zoom back in. So that's where we are. So our first target is back to 150. So there's still like 400 or 500 pips in this. I'm a seller of yen. Yeah, but only for the last 5 years, though, Greg. Now, when we were at 100, what was my target on the USD yen? It was last August, so it took 1 year. So what was my 1 year target? It's funny how different answers. Really? I thought it was 125. But you know, if it wasn't, then okay, it wasn't. I thought it was 125. But anyways, on the top's 125, of course. But I don't know. Well, YJ says 20, and YJ's not wrong that often, so. So I thought 125, but if YJ says 120, then I'm just going to like, whoa, all right, very well could be 120. So that's that. All right, so no, honestly, you know, if YJ says 120, I'm not asking to say 125. You said 120, and well, if that's how you remember it, that pretty well could be it. So let's move, kind of go around the world here. Okay. So we're back at 40 bucks on oil. And I made it clear once we got through this 42 area kind of thing, I just don't know. So I think we're bouncing well, I don't know. Again, I don't know. So now we just got to wait until it changes. But keep your eyes open, commodities, right? Right? How could you know what could you do to maybe start buying commodities again at the bottom if you wanted to do that? What would you start, fundamentally looking at? By the way, do you want to see the demo of that fundamental website I'm building for you guys? The fundamental training course? How's that? Isn't that pretty? Yeah, so I don't want to show you anymore. But I'm going to keep adding and adding and adding to it. It's a project that I've started for another thing, and I want to keep adding to it for that thing too. So so right now I think there's 15 hours of mental focused videos, but I want to take you through things like balance of payments, balance of trade, inflation, production, and all that kind of stuff as well. So the training course probably eventually will get to like 30 hours of videos. So anyways, you asked me to do it, so I did it. I've been working like a week on it already. All right. Okay. So yeah, oil may be stabilizing. Oh yeah. So what could we do fundamentally to analyze whether commodities are going to stabilize and dare I say go up? Well, Baltic Dry Index is one. Can you think of another one? The CRB index? Cool. Yeah, the CRB. No. Big Mac index is, no, that's not commodities. So those are two that I would watch. And then, of course, watch the commodity charts. So a cheeky little monkey oil trader is watching this action. Okay. Now, what does the 55 predict? See how the 21's dead? What does the 55 predict? Yeah. Well, it's not necessary, and I should clarify that it has a higher chance of support holding. Okay? But we got to be careful because somebody is going to sell in here, right? So it's just the 55 being in control suggests that it's come back pretty hard, and this could be a reversal zone. Well, it didn't do it here, and it didn't do it here, right? See all the times it didn't reverse off the 55? But, you know, now that we're at 40, I think it's more believable. But don't do it. So guess what just came out 1 minute ago? The Baltic Dry Index. So we're at 900. The number came out 905. So it hasn't stabilized. Okay, so maybe keep your eyes on that. Now, you know, it's not it's not going to put you in trade, the Baltic Dry Index, but it's something that you should watch. So here's our year so far. We dropped all the way down to, what was that? I can't even read that. Was it 500? So we dropped we went from 500 on the low this year, and we rallied all the way up to 1200. Okay. So we've come down about 50% off of the recent peak. So it'd be interesting to see if it crept back up over 1,000. If it did that, and you were already long commodities, you'd feel a lot better. Okay, and then you can use any of these indices. I don't care what you use, but you want to use an index of all commodities, not just, you know, not just one or the other, like gold. So if you use something like the CRB index, CMCI, CRB, let's do this one. This is a commodity index that includes many commodities. Okay, so 1 month you can see it's been hammered, right? Over the course of the year, even worse. If you started to see it stabilize, what if you traded this like you, or let's say analyzed this as you analyzed a currency chart? What if you looked on a smaller time frame? Because remember that, you know, what if you got a chart on this and you look for a reversal pattern, you know, on an hourly chart or a 4-hour chart or a daily chart or whatever that suggested up on the CRB index. Well, how do you make money on that as a currency trader? Well, you start looking for opportunities to buy Aussie, you start looking for opportunities to buy CAD, you start looking for opportunities to buy Kiwi. You probably don't trade Brazilian Real, you probably don't trade ruble, but you know, how about Noki? You like a Noki? You traded a Noki? Yeah, Norway, the crown. Is it kroner or crown? Which one is it? I always get them mixed up. I think it's the kron. Kroner. That's why I said no, it kind of covers everything, right? Yeah. Cool. Yeah, well, there's a commodity currency directly tied to oil. How about Mexican peso? Really? GDP in 20 minutes? Great. You want to talk about what happened 3 or 6 months ago? Awesome. It's like that board. What's the name of the board? The Economic Council of something. I can't remember. But there's a group of very, very wise and intelligent economists that, like, 9 months after everybody knows there's a recession, they come out and they say, "We are now officially in recession." Like, it's 9 months later. You guys know what I'm talking about? I forget what it is. Every time, I've been through a few recessions now as a currency trader. And it's funny, you know, just like 9 months to a year after the fact, they come out and they're like, "This is now officially a recession." Like, really? Oh boy. So anyways. Yeah, the peso. Yeah, trading the peso. I like the peso. Not a day trade, but I trade it peso in a particular way. I was actually talking to TradersWay over the course of the last few days about it, about not having it in MT4. And there isn't enough volume to really warrant anybody caring about it. And then there's just not enough, liquidity out there either for it. I mean, it's kind of a nice thing to have, and it's a nice thing to look at. But at the end of the day, nobody wants to spend money on it. Like clients aren't kicking down their doors, and there isn't liquidity anyways out there through the liquidity partners. And it's just like, it's a big effort and expense for nothing, but it is pretty to look at. Now, I do believe the Mexican peso is in the C trader. So, well, okay. Bob's brings up a funny point, and everybody does this, Bobsy, BH. The spread's crazy, right? The spread's crazy. And then, if you bust it out price-wise, right? It's sort of like shopping at Walmart, for crying out loud. You get there and you're like, this is a really good deal. And then you look on the price, like let's say a bag of frozen shrimp. And you're like, wow, that's a really good price. And then you look over in the corner of the price tag and it shows you the price per ounce. And then you're like, actually, I can get a better deal at like a really nice fish market where it hasn't been frozen for 2 years. The price per ounce is high, but the price per bag is low. It's like if you look at the spread and you're like, oh my gosh, 300 pip spread, holy criminy. But if you compared it pip per pip to a Euro USD, there's almost no difference. I mean, there's some difference, but it's not dramatic by any means. I mean, it's the same. It's basically relatively, I mean, maybe it's 10% more. It's not 200% more. It's the fact that the Mexican peso is priced out to an extra digit, and it moves 1,000 pips a day. You know what I mean? Where Euro USD moves 100 pips a day. So that's why there's a 300 pip spread, not a 3 pip spread, or 30, whatever. So if you add it up money-wise, when you pull the trigger one standard lot for one standard lot, it's not dramatically different. But a lot of people will stay away from a Mexican peso trade because they're like, oh man, the spread's 300. Well, come on, no. Yeah, there used to be a great one. I think it was like Turkish lira Thai baht. It was like, a 3,000 pip spread. Yeah, but it's psychological, but just get rid of a zero, that's all. But here's the thing, I've taught it over the years, and I don't have it on this MT4 purchase, and nor is it that important. Maybe one day I'll show you on C-Trader, but because I have that somewhere on this computer somewhere. But the thing is, there's so much going on fundamentally in the world right now that is so dramatically more important. Like when the Fed raises interest rates, for example, or quantitative easing out of Europe, or devaluation of currencies all over Asia, is just way more important to what we do every day than the Mexican peso that I just haven't covered it. But I've taught people for years how to trade the Mexican peso correctly, and when I show them, their jaws just drop wide open, and they go, holy crap, Wayne, seriously? Like, yeah, I've been doing this for years. And then like, oh, but I can't trade it because it's got a 300 pip spread. Yeah, but it's $30 just like the euro. I mean, it's the same. So all of a sudden they're like, well, all this stigma around this Mexican peso suddenly disappears. And you're like, oh my God, how come I've never looked at it before? Because you're ignorant. You're just ignorant, as Michael Jackson would say, right? Because you're ignorant. You're just ignorant. Well, now you know. So it's possible to trade Mexican peso logically, intelligently. I don't do it every day, nor is it important relative to everything else in the world. Like, dude, seriously, Euro USD is moving hundreds of pips a day, and we don't need to talk about Mexican peso. Okay. What can we expect? I expect a good number because as we get more and more GDP numbers, we're going to drop off trailing numbers. And we know the first quarter of the last few years have been bad. Third and fourth quarters of the last few years have been good. So as we keep dropping the first quarter data, suddenly the newer information is going to get better. But, again, we've talked about this over the last 3, 4, 5, 6, 7, 8, 9 months. I've said everything 1,000 times. So I kind of forget what's been said or what hasn't been said, but what is GDP going to be bad? You know what I mean? Like, what is it going to be bad? Why would it be bad? Okay, is it going to be unbelievably stellar? Possibly. Depends on if you're tracking the GDP or not. When are they going to drop the first quarter? But see, I'm more interested in what's going to happen out of the Bank of England. So I did a whole video on Forex.today about GDP in the UK and how to predict the shocking surprise in January. We're going to get this huge number in January, and it's going to be amazing, and everyone's going to be shocked. But I already prepared you for that, I don't know, a month ago, right? You guys remember that one? We went PG, because here's the thing. The Fed going to change their decision? Is there anything that could happen that would make the Fed change the timing of raising interest rates in the United States? Probably not. I don't think the China deal was big enough. Okay? And someone will say, well, they've seen the market volatility after this Chinese cut. Well, first of all, I didn't freak out, did I? Not even a little bit. Not even the slightest did I freak out on that. What did I say? Business as usual. Get out of the expensive stuff, go to dry powder, and start buying good deals you haven't been able to get in. Right? Look for opportunities. So then people say, well, what about the volatility? What about the volatility? Like, dude, you're such a grandpa. Right? This isn't your dad's stock market. Did your dad have zero latency, high frequency traders and computer trading systems that will just dump entire portfolios and then buy them back? I mean, dude, we're in a different world. Grow up, right? Yeah, there's lots of volatility because a computer now will say, get out of everything now. And then the market drops, hits a number, whatever the number is, and all of a sudden, buy it all back now. And it's done, right? It's all the algos, right? So, for example, I forget where I got this info, but anyways, this hedge fund manager that's in high frequency trading, he was saying what they'll look for is they have about 20 stocks on the S&P 500 that a computer is analyzing in real time. And he says, if we can get all 20, so now you got sort of the correlation here. Let's say if all 20 are down 2% or whatever the number is, right? If they're all down 2%, they immediately, and I mean within 100th of a second, they will short sell every stock in the S&P 500. And in large blocks too, and just boom, hammer it. They'll drop, 200 million bucks. Boom, on the stock market, short everything hard, because they know if they can get that situation where there's sort of a systemic risk in the market, and even the good stocks are down a bit, all of a sudden they'll just hammer everything. Well, where do you think the volume or the volatility comes from, guys? Did that exist 30 years? Where all of a sudden, in less than 1 second, 200 million on short everything kicks in? What do you think that does? Hits stop losses. What do you think happens when suddenly a whole bunch of people's stops are hit? Well, they know, right? The high frequency guys, they know if they can jam it down and get some other people that are emotional in the market or hit some stops, they know they're going to be able to move the market for at least 2 minutes. At least 2 minutes. They might even be thinking 2 seconds. But, and then just imagine now the other guy on the other side of that trade, like that day when we were limit down, remember that? We went 1/10 of 1 point from limit down, and the stock market has now rallied almost 1,000 points. Why? Do you think someone was sitting there with billions of dollars, or multiple players sitting there with billions of dollars that said, all right, we know where it's going. It's going to go limit down, so let's buy it limit down, but just 1 point, 1/10 of a point above it. Boom! Buy everything, and not just one thing, everything, and up it goes. Epic, right? So there's the volatility. Now, do you think the Federal Reserve is clueless to this? Yeah, well, yeah, you're right. High frequency 2 minutes, but we're talking it out, okay? Okay, Jaroslav. So anyways, no, of course they do. So they understand where the volatilities come from, but it's not going to. So where are we talking about this, right? Whatever happens, the Fed's not going to change. Okay, whatever happens, the Fed is the Fed. They've decided, and they're going to do it, and nothing else matters. So what does matter when we're talking about GDP, here it is. How to know when the Bank of England will raise interest rates and why. I did this August 6th. And it has to do with GDP in the future. And I've already planned out for you guys the shocking news in the beginning of the year. The UK is going to have shockingly good GDP numbers. And the world's going to freak out. Oh my gosh, it's such a surprise. And that'll give the Bank of England the courage to get out of bed and raise interest rates. But it's not a shock to me. I already know it's going to happen. And I explain how and why. So in sort of reverse psychology, is today's GDP going to be bad? No, probably not. Is it going to be stellar awesome? No, maybe. But at the end of the day, does it matter? Well, a good number will give us dollar strength, but we're already buying dollar. You see, like, to me, it's we're already doing this. We're already long dollar. Right? Like, right? Aren't we? Right? It's like, it doesn't change anything. So the rest is just price action. And you already know how to trade price action, right? So look, a bad number, dollar will weaken for a while. And why don't I want to trade the euro yen? Because the euro would get strong, but so would the yen. Why would the yen get strong on bad US GDP numbers? Yeah, Japanese investors or Asian investors, let's just say that, decide that the market's a little bit risky and they want to get out of the stock market and they want to get into the bond market. So they're going to move it back out of US stocks into JGBs. And that's that. Jambo Sambo. Okay. So that's JGBs, Japanese government bonds. And let me just say the Japanese, they want yen for their bonds. So have you guys been using the trading ideas posted on forex.today? Right, it's the 27th today, so there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Well, at least 11, probably 12 trading ideas so far today. Yeah, 11. Isn't that nice? Pele says really helpful. Jim R says excellent. Sebastian says yes, reads every day. Cool. Well, some of the analysts are in the room now. There's the team. Cool. So I'm glad you're utilizing. All right. So big number, no whammy.
Weekly initial jobless claims expected 274,000. Prior was 277,000. Continuing claims expected 2.25 million.
This is brought
and
to you.
The second reading on U.S. Q2 GDP expected at 3.2%. Should be up from the advanced reading of 2.3%.
This is TradeTheNews.com.
The GDP data and weekly jobless claims in just a few seconds. .7% for GDP, 3.7% higher than 3.2% expected. Consumption 3.
Holy moly! That is so unexpected.
4.8% is in line with expectation. 271,000 jobless claims is 3,000 lower than expected. No back month revision.
Oh my gosh! That is so unexpected. It's a good number. Yay! Well, what do you know? It was a good number. How shocking. Coming up to a key pivot point here. Da, 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 da. Coming up to 1250. Good, good, good. Yeah, you shorted at 13, eh, pal? Wow. Right. Yeah, not a complicated trade. Good for you. Right, do you guys remember the 80-20 rule? So if you're below the psych level in a downtrend and it rallies back up, you sell between 0, 0, and 20. Right? We covered that when? Right here. We covered that on the 20th. So a week ago. Pal just made 50 pips. Good job, pal. High five. High five up high. Down low. Too slow. Cool. Glad it's starting to kick in for some of you guys. I really do want you to succeed. I really do. Yeah, I think once you start knocking down some pips, maybe next year we'll meet up in Las Vegas and we'll race Ferraris around a racing track. Do a little get-together, team up. Say, oh man, try this Audi A8. Sick of the Ferrari. Try the Audi. Yeah. Take the Porsche GT. Sebastian says he made at least 1,000 pips more this summer from my webinars. Cool. That's what I want to hear. All right. So pivot point holding. Now, see this thin line? That's where price is. Always eyeball where the next, roll reversal area is, and it's just not far from that 786. Is that right, Alex? Were you taught wrong somewhere? Yeah. Has anyone ever been given advice that was dead wrong? Don't use that pivot point nonsense. My grandpapa never used pivot points. Yeah. Oscar said yeah. Charles, yeah. A few times. I think one of the interesting things as a coach that's really helped me is that I'm self-taught. So I'm not like just regurgitating, information from some other guy's training course, right? How many gurus out there just simply are gurus because they paid other people $95,000 for courses, and then they said, you know what? I'll just become a guru. I've taken so many courses now. I'll be a guru. Right? And I'm self-taught, so I do weird things like I draw my fibs upside down. Well, I'm sorry, dude, but I'm self-taught. I had to figure it out. So it's actually probably a blessing in disguise. I've been trading for so long that there just wasn't any material out there when I first started trading. Just imagine my first I think it was FXCM. It was, I think, my first account, and they didn't even have a charting package. So you would open up a chart, or sorry, you'd open up a trading account, and then you'd have to go somewhere else and pay for charts, download them, and you had like charts, and you had your trading platform. It's just imagine, like, the world was so different. Okay, we got through that. Keep eyeballing here. Okay, and by that I mean, you know, if you sense hesitation in this area, you know, don't be shy in taking profit. Right on, Rod. So anyways, long story short, as I'm staring at millions of charts and babbling on, I apologize. There's a lot going on. But long story short, I'm really glad that some of you guys are finding some success. Pound dollar still going down, euro dollar still going down, USD yen still going up. Just everything's doing what it's supposed to be doing. Cool. Right? And one thing I want to point out, just I know it's repetitive, but it's important. The key thing here is the failed higher high that we had. Okay? And we were really clear that the failed high means game on back in the prevailing trend, right? Because ultimately the trend is still down. And it's just third week of August stuff, right? Guess it depends on how you draw it. I guess that would be it there. And a lot of people got caught looking the wrong way, chasing the news, freaking out. Stops were hit, panic buttons were hit, and the smart money stayed calm and said, you know what, I want to sell this. That's cool. But selling up here, you see how it turned on a dime and went bearish? I never recommend that you do, you trade that way, where you say, all right, this is a 3A2, I bet it's going to go down, I'm going to sell. Don't do that. But recognize that it did kick off an important area. It did make its nice retracement, as it's supposed to. And then, if it's going to stay bullish and go to the next level, it was supposed to make a higher high. So the moment it failed that, that's when you're game on to the downside. Okay? Okay, but that's the key to all of this. Okay? And as far as I'm concerned, this has the potential to break through parity and go all the way to 80. Okay, and we knew it would start the third week of August. Now, I don't think anyone knew China was going to surprise the world and freak everybody out this way, but nonetheless, that's how it is. That's the world we've been given. Time to readjust the portfolios, get back into the long game, right? So you got to now do it this way. Oops. the key point. Where it failed, and more importantly, that it did fail, and it was important. See if I can get that in there. And, and then we've been short ever since, right? Lower, 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 high, lower, low, lower, high. Just beautiful stuff, guys. Lower, low, lower, high, lower, low, lower, high. Right? Like, look at this short off of 13 that Powell took, right? You take the old support and drag it across and it becomes future resistance, right? I mean, it's just beautiful trading. Makes a new lower low. Take old support, bring it across, future resistance. It's just beautiful. Just beautiful, beautiful, beautiful. Beautiful, beautiful, beautiful. No, Marcia says that we're talking about 122. There is a technical issue with that. Let me cover this USD CAD and then move on. Is Horace in the room, by the way? It's my buddy Horace. No, Horace is not in the room. Tisk, tisk. I'm going to have to. All right. Anyways, I was talking to Horace about a trade here. See the trade plan? No, this was actually drawn like Tuesday? I think Tuesday? What is it today? Monday? Or Thursday? You know what? This might have been Monday that I drew this. Monday or Tuesday I drew this. The interesting thing is, it's a 4-hour chart, right? And when I drew it, we were here. And the interesting thing about it is, Horace said, it's hard to believe it would come back that far. Right? And everybody thinks it, right? Right? I lost my connection. Is my internet down? But anyways, I think we're still live. I think I just lost MT4 connection, that's all. So we'll see if it comes back. But remember, it always comes back, guys. It always comes back. And your job is to say, well, I'm going to wait to buy at some. Even though we had this big move here, the temptation is not to buy it high. Where's support? Right? Plan. Do I have a contingency here? Like, is there a plan? Is this set up? Should I be panicking? Well, it seems like I got it planned out. I think, isn't that the point? And, okay, looks like we're reconnected. Good. So that's that. I mean, clearly it's moving up again. It has some hope. Jam your stop, take a walk. And then I want to end on Marcia's comment. And I have one concern on that that trade up into 22. We're still at 2050, right? Let's see, what time frame do I see this at? I guess it's a daily chart. Hang on, let me move this to a daily. Okay, there it is. So my concern is this here. It's not the 786. Let me get rid of that. Okay. So my concern is this in here, daily 5 EMA. Okay, drag this across. Old something something. So this 2050 to 21 area is a cautious zone for me. So could it go to 22? I'm more worried about 21 than I am about 22. So that's all. Because if I'm using moving averages, let's just talk it out. If I'm using a moving average, like I have a moving average there, so how do I use it? I would sell that if I'm a bear. Now, I'm actually a bull, right? But this isn't bullish. Not on the daily chart, right? So even as a bull, I'm concerned that before it gets up to that level, it could sort of at least, you know, that's kind of what I'm thinking. This is just, this whole area in here is just a concern zone. I don't think I'd be adding to positions in here, is another way of saying it. So that's all, Marcia, but I'm sure you're killing it. So, all right, so it's been about 80 minutes. So I guess has it been, yeah, 80 minutes? Yeah. So I guess it's my time to go. Another busy day. So peace on earth. May the pips be with you. May your profits be above average. Thank you for being a client of TradersWay. This video will be uploaded to forex.today. And there's been a few requests to have a chat room on forex.today so that after these webinars you guys can still continue to hang out as a group. Would that be great? Well, there's a couple of things that I've discussed with them. One would be adding that, and I also would like a way for you guys to post charts and post your own trading ideas with each other. So you could take a screenshot of your trade setup and share it and get feedback from the others. So I asked them to fund it, put a budget together and allow for that to happen, and they're agreeable. So I think what would happen is, obviously, if you guys are going to collaborate and post things and share things and have comments with each other, you'll need to register. And right now, there's not a huge reason to be registering. But for that to happen, obviously, you would have to have an account. So that'll be a process, but I don't think it'll be a painful process. Okay, cool. So anyways, hey, peace on earth. May the pips be with you. May your profits be above average. Welcome back from summer. The good days are here. Right? It's almost like harvest, right? The grapes are ripe, and we got to pick them as fast as we can. The pips are right, guys. Pick those pips as fast as you can. Yeah. What is it? What day is it? Is it a Thursday? Yeah. So Friday is tomorrow. So I'll be at fxstreet.com. I'll see you over there, yo. Have a wonderful trading day. Enjoy the New York Open. Cheers. Huh?